Hello friends and welcome to my YouTube channel Simply Stocks, and today it is the question and answer session, and I'll discuss about whether the small caps would come back into picture in the next 1 or 2 months or not, or whether they will remain depressed. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Now about the small cap index, and I did talk about the small cap breakout last week, and it has been confirmed over the last 4 or 5 days the way the individual stocks have moved in the you can say the small and the micro cap segment, as well as the index as a whole going up beyond 14,200 odd levels. We could see a massive move in the small cap index this year, and any dips towards 14,000 to 13,500 is a very good buying opportunity for all you people into very good solid companies, into companies which have very good financials and balance sheet. So there have been a number of companies that are making new highs, number of stocks that are making new highs, and many stocks went up 10 to 20% last week, which is a clear signal that the money is now flowing into the mid and small cap section, and we could see consolidation and then a downward cycle in the nifty or the large cap space. So be very careful about it. If you are invested in many of the large caps or the bellwether companies that have done well over the last couple of years, you need to take out money out of it and probably park your money in very good quality mid and small cap companies. Now let's take up some questions or queries from the viewers. Dev Singh has asked about a video on Bandhan Bank. I don't usually make videos on the financials apart from very few. I'll try to make one on Bandhan Bank, but I would suggest that you invest into financials which have low debt and which have been doing well over the last 5 to 8 years in terms of numbers and their balance sheet, rather than looking at companies which have high amount of NPAs, and their NPA levels are going down on a single quarter but then going up again after 2 or 3 quarters, and that has what has happened with mid and small cap banks like Bandhan Bank. uh, Ramaraju has asked about Coromandel International. It is a very good lending company, but there are other stocks as well in which you could invest in the same space, which are extremely good in lending, although a little bit expensive. Probably what you can do is invest into those companies when the market falls and when these companies come down by around 15-20%. I have already made a video on Bajaj Finserv yesterday, which is a very good lender, Bajaj Finance itself, HDFC, etc. Stay with the leaders. I've always mentioned that either you stay with the leaders or you analyze some mid or small cap company to detail and look at valuations, and when you find value into them, only then invest. Otherwise you need to stay with the top notch companies in each sector. Joel Derrick has requested for a video on ITC, which have never performed over the last 20 years. It has done around 10-12% yearly to about 15% yearly. Yes, it is a very good stock to buy, but I do not think it could be a multi-bagger, simply because ITC, always, although looks like an FMCG company, is more like a cigarette business, and their 80 to 90% business still comes out of cigarette. And we have seen how government taps cigarette prices and have the duties going up every year. So in that regard, it would be very hard for ITC to raise the prices and also have the sales going up year on year. If the prices are raised exorbitantly, then I do not think that the sales would go up in the same manner as any other FMCG company around, like Britannia or HUL or Marico, Dabur, etc. So hence I believe it is an avoid. It is a very good company to invest, say for 20-30 years, because you get very good dividend, but over a 5 to 7 year period, I think ITC is an avoid. uh, the question that comes up, and there are a couple of questions from Jack 3 Men, about one is about Kaplan Point. I think Kaplan Point Labs is a very good company, but again, it is one of the stocks that have already been discovered over the last 4 years and have moved up appreciably from when it started to move in late 2015. Uh, Probably, I believe that the sector, and everybody is asking, there have been many questions about which sector would outperform. I think the sectors to look at are the financials, and even in the financials, the AMC or the insurance business sector over the next couple of years. And if you look at small cap consumption in not FMCG, but you can say consumer goods, consumer durables, small cap autos, auto ancillary, etc. Auto ancillary and autos might not do well over the next 6 to 8 months, but they would do well if you take a 2 to 3 year period. But small cap consumption companies which are into consumer durables might do better than if you're looking at any pharma company or an IT company. Dr. Dilip Kumar has asked that whether we should start buying Nestle as it has come down to 14,200 levels from the highs. I do not think that it's come down a lot. It has been making new highs for I think ages. Over the last 18-20 years, it has been one of the most, probably the biggest outperformer of the market along with Asian Paints and you could say HDFC Bank. Nestle is a buy on any dip, any decline, or even it is a very good buy at these levels, provided you have a 6 to 8 year time horizon. It is a market leader in its own space, and it is like a monopoly in the business that it is at the moment. 1.5 lakh crore market cap might seem expensive. At a PE of around 50 to 60, it might seem expensive, but I believe that if you take a 6 7 year time horizon, this could still be a 3 4 bagger from here, 2 to 3 bagger from here. Uh, there's a request on making a video on UCO Bank by Jayesh Chanchia. I would make a video on UCO Bank for sure, but as I mentioned when the question was asked about Bandhan Bank, I believe that one needs to stay away from all these mid and small cap banks, whether they are private or public, simply because there are many things that we are not able to understand in terms of their businesses, because that comes out later on. Their NPAs or whatever loans that they have given these companies, that doesn't come out well. That doesn't mean that the company has a bad track record in terms of management integrity. The only thing is that we need to stick with the leaders, as I mentioned, and the leaders in the private sector space is Kotak Mahindra, HDFC, and so on and so forth. Now, there's a question from Arun T, and these are very interesting stocks that he has brought forward. HLE, Glasgow, Textile India, and Polymed all are small to micro cap companies, and I have looked at it on one go, and they look good in terms of the results that these companies have shown. But I'll do the detailed analysis and probably for sure make a video on these companies. There's some more questions that have come up. There's a question from Shiva Kumari, and she wants me to have a video on Mangalam Organics. I believe it is a very decent company to invest in. It's just that it's going through a phase which is a downturn in the business, in the cycle, because of the China factor, because of the factor that a lot of chemical companies have come up in China, but it is also exporting to many parts of the globe and have major clients. I'll definitely try to make a video on Mangalam Organics, but there are a number of stocks that have been listed in my list, so you need to wait a few weeks to 1 or 2 months before this video comes up. Okay, so next question that have come up is probably not a question, but I have seen a lot of queries coming in on Maruti. Now that Maruti is around 7,000, 7,500, there is a lot of criticism coming in on the video that I made a few weeks back, in which I said that Maruti would come down to 4,400 and that would be the best price to buy at. At that point of time, Maruti was trading at around 5,000 to 5,500. I still believe that the current move in the auto pack is not quite the last, you can say the last say, and we could see a massive fall in all the auto stocks over the next 6 months or so. Then, when the up move will begin, that would be the biggest move in the auto pack. But at the moment, I still believe that there could be a major decline in the major auto companies. We might not see 4400, but we may see 5500 to 6000 levels again on Maruti very soon, probably in the next 6 months. Chaitanya has asked that what is the right price to buy a TCS at? Well, one thing is about TCS that it has not run up a lot compared to an Infosys and other companies in the IT pack when the IT sector started moving. Any 8 to 10% decline in TCS is a very good buying opportunity, but in IT at the moment, the only you can say tailwind is the dollar rupee equation, in which the dollar is currently trading at above 71 or so, or nearly 71, and it could go up even higher because of the escalating tensions between Iran and US. So what I believe is, yes, you can invest, but don't expect 18-20% return year on year. Probably you'll have a late single digit, or you can say 11 or 12% return year on year in such stocks. Jack Threeman has also asked about Piramal Enterprises. I'll analyze Piramal Enterprises for sure in the next 2 3 weeks or so, and probably give you a better idea whether it is a very good buy at these levels, or what could be the best level to buy at. Thanks for appreciating all my videos that I've come up with, whether it was on Bajaj Finance, Finserv, and other companies, or the Christmas special and the New Year special video. I'll definitely try to come up with more videos of such sorts. So this was my question and answer session for this week. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.